If you watched my video yesterday, you knew I was right. $40.40 was the second profit target in my gold trade strategy. Gold just crashed nearly 3% and punched through $4,000, the psychological line everyone was watching. And here's the kicker. It happened while oil spiked 6% and the U.S. and Iran started exchanging fire over the weekend. Gold did the one thing it's not supposed to do. It fell on geopolitical chaos. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today. Write this number down, 4,040. If we break that level today, the entire structure resets and we are looking at a cascade toward 3,900. That is your invalidation line. Everything I'm about to show you hinges on that single number. Let's start with the macro picture because this is where most traders get it completely backwards. Gold printed an all-time high of 5,600 in January. Since then, we've seen a 28% drawdown. 4 consecutive losing months. June alone dropped 11%. And now we are sitting at 4,001, just barely above the psychological 4,000 handle that everyone has been watching like a hawk. But here's the thing. The weekly trend is strong sell. The daily trend is strong sell. The 4-hour trend is strong sell. The 1-hour trend is strong sell. Every single time frame is aligned to the downside. That's rare. And that alignment is exactly what makes this setup so tradable. Now let's talk about the MA structure because this is where the story gets really interesting. On the daily chart, price is trading at 4,001. The MA20 is at 4,134. The MA50 is at 4,298. The MA100 is at 4,407. And the MA200 is at 4,323. Every single moving average is stacked above price. That's a death cross cascade. The MA20 below the MA50 below the MA100 below the MA200. This is not a market that wants to go up. This is a market that is structurally broken until proven otherwise. The 4-hour chart tells the same story. Price is below all 3 moving averages with bearish alignment. The 60-minute chart? Same thing. Every time frame is in agreement. That's conviction from the algos. The MACD on the daily is at negative 70.62 and diverging lower. That's acceleration, not deceleration. The RSI is at 37, approaching oversold but not there yet. And here's what most traders miss. An RSI at 37 in a strong downtrend is not a buy signal. It's a continuation signal. In a bear market, oversold can stay oversold. The CCI is at negative 81. Williams R is at negative 78. Momentum is bearish, momentum is accelerating, and momentum is not reversing yet. Let's get specific on levels. Because this is where the money is made. The pivot point sits at 4,085. Support 1 at 4,068. Support 2 at 4,051. Support 3 at 4,034. Resistance 1 at 4,101. Resistance 2 at 4,118. Resistance 3 at 4,134. The ATR is $95.5. That means we can expect $95 of average daily movement. And today we've already exceeded that. Volatility is expanding, not contracting. The fundamental driver here is clean and it's punishing for gold. Fed Governor Waller said Monday that if CPI rises this week, the Fed should consider a rate hike. Market pricing for a July rate hike jumped from 35% to 50% immediately. The 10-year Treasury yield pressed a 7-week high at 4.59%. And here's the mechanism that most retail traders don't understand. Gold pays no yield. When real yields rise, the opportunity cost of holding gold climbs. Money rotates out. It's that simple. The dollar strengthens. Gold gets squeezed from both sides. Higher real yields and a stronger dollar. That's a double whammy. Now here's the paradox that defines this entire session. The U.S. and Iran exchanged fresh strikes over the weekend. Iran declared the Strait of Hormuz closed. Oil ripped more than 5% towards $75. And gold, the asset that is supposed to catch every haven bid in exactly this kind of chaos, rolled over instead. This single fact is the entire forecast in miniature. When gold cannot rally on a closed shipping lane and a shooting war in the Gulf, the market is telling you that rates and the dollar are running the tape, not fear. This is not a haven trade right now. It's a rates trade wearing a gold ticker. And until real yields turn, the path of least resistance leans lower. The cross-asset linkage is critical here. Bitcoin fell in the same session. Equities rolled over. The only assets catching a bid were oil and the front of the Treasury curve. That is a coherent risk-off but rates-up environment. And in that environment, gold is structurally disadvantaged. The narrative for the next 1 to 2 weeks is simple. If CPI prints hot on Tuesday, the rate hike narrative intensifies, gold breaks 4,000, and we target 3,900. If CPI prints cool, we get a relief rally toward 4,100. But that rally is a sell, not a reversal. The trend is down until the daily structure proves otherwise. Do you think gold breaks 4,000 this week? Comment yes or no. I'm tracking consensus. Most people skip this section. That's exactly where the money is made. Keep watching. I'm giving you 3 trade setups. 2 scalps. 1 swing. Exact entries. Exact stops. Exact targets. Strategy 1, the opening scalp. This is a 5-minute structural trigger right at a key intraday level. We're watching the 4,040 buy zone that Owen Steele identified as the first key support. If price taps 4,040 and prints a bullish engulfing candle on the 5-minute chart, we enter long. This is a high probability scalp because 4,040 is the first major support level before the psychological 4,000 handle. The stop loss goes at 4,025, $15 below entry. Take profit 1 at 4,060. That's a 1 to 2.3 risk-reward ratio. Take profit 2 at 4,085 if momentum extends, but we take partials at TP1. What instantly voids this scalp? If the 5-minute candle closes below 4,040, that's a breakdown, not a bounce. We are out the opening SCALP entry, 4,040, 5M bullish engulfing after the tap, stop loss, 4,025 take profit 1, 4,060 take profit 2, 4,085 risk, air reward, 1:2.3 invalidation, void if 5M candle closes below 4,040 strategy 2, the liquidity grab. This one is for the counternoise traders. We are targeting the sell-side liquidity zone between 4,085 and 4,095. Here's the play. If gold rebounds from 4,040 into the 4,085 to 4,095 zone but fails to reclaim 4,100, we enter short after bearish confirmation. This is a fake breakout setup. The market is hunting stops above the recent swing high, and we are waiting for the rejection. Entry trigger. Price taps 4,090, prints a bearish pin bar or engulfing on the 15-minute chart, and closes back below 4,085. Stop loss goes at 4,105, just above the 4,100 resistance level. Target is a fast one, 4,040. That's a 1 to 1.3 risk reward. This requires fast execution. If you hesitate, you miss it. And if price reclaims 4,100 with strength, the setup is void. We are not fighting a breakout. The liquidity GRAB entry, 4,090, 15M bearish rejection after tap, stop loss, 4,105 take profit 1, 4,040 risk, reward, 1:1.3 invalidation, void if 4H close above 4,100. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Strategy 3, the session swing. This is the trend-aligned swing trade based on the 4-hour and daily bias. We are looking for a 4-hour close above the 60-period moving average with a bullish MACD cross. That's the trigger. But here's the thing. The MA60 on the 4-hour is currently around 4,100. That's a big move from current levels. So this is not an immediate entry. This is a watch-and-wait setup for Tuesday or Wednesday. Entry trigger. 4-hour candle closes above 4,100 with bullish MACD crossover confirmation. Entry price around 4,105. Stop loss goes at 4,015, below the 4,040 support zone and outside the daily structure. Take profit 1 at 4,170. Take profit 2 at 4,200. Trailing stop rule. Once price reaches halfway to TP1, around 4,135, we move stop to break even. The invalidation level that shifts the medium-term outlook is a daily close below 4,000. If we get that, the next downside targets are 3,900, then 3,800 on the daily chart. The session SONG entry, 4,105, 4H close above 60 MA plus MACD cross, stop loss, 4,015 take profit 1, 4,170 take profit 2, 4,200 risk, reward, 1:1.6 R to TP1, 1:2.3 R to TP2 invalidation. Void if daily close below 4,000. Let's be very clear about what invalidates the entire bearish thesis. Gold must reclaim 4,100 on a daily closing basis with volume. Not a spike. Not a wick. A daily close. Above that, the next resistance is 4,120, then 4,200. But even if we get that recovery, the broader structure remains bearish until we break above the MA20 at 4,134. That's the line that separates a relief rally from a trend reversal. Until price is above that MA20 on the daily, every rally is a selling opportunity. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk. No positions through high-impact news. And tomorrow's CPI is exactly that kind of event. Stops are non-negotiable. This is how you survive to trade the next big move. Now let's talk about the single most critical level for the next session. 4,000. That's the line in the sand. A decisive break lower on volume strengthens the bear case and opens the door toward 3,900 to 3,960. On the upside, if prices stage a recovery, watch how gold behaves between 4,096 and 4,115. A sustained hold above that zone would bring 4,200 resistance back into focus. But the path of least resistance leans lower. The trend is down. Momentum is down. The fundamentals are down. The only thing that changes that is a cold CPI print and a dovish Warsh testimony. That's tomorrow's wildcard that if this level breaks, 4,000 on a daily close, the whole monthly trend flips and we are targeting 3,900. I'll have the updated blueprint 24 hours from now. If you want the full breakdown on trading commodities, Aussie, Japanese yen, Eurodollars, and Bitcoin, the videos are live now. Tap the end screen. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter.